Hello and welcome to yet another Value Podcast. I'm your host, Andrew Walker, and with me today, I'm excited to have Abdullah from MBI Deep Dives. You guys might know him from on Twitter, where he goes by Mostly Borrowed Ideas. So Abdullah, how's it going?
Pretty good, pretty good. Thank you so much for inviting me, Andrew. I'm really looking forward to it.
Yeah, no, I think it's going to be a great conversation, but let me start this podcast off the way I do every podcast, and that's by pitching you. You know, MBI Deep Dives is relatively new. I think you just launched the MBI Deep Dives, what will eventually be a paid research service, a month or two ago. You've published two ideas so far, Uber, and then the idea we're going to discuss today, Etsy. And, you know, it's exactly the type of research service that I personally like. One person doing deep dives into interesting ideas, and particularly like, you know, actually putting your money behind your research and your ideas. You know, that's the whole point of a stock service. It's not our research in stocks. It's really not to drive research service. It's you want someone putting their money behind it. And I know you said you put 10% of your personal account into Etsy. So I've really enjoyed the free subscription so far. And I know it's not going to be free starting in November. And I plan on being a paying subscriber. Makes me sad because I love free things, but I love value add even more. So right. I'm looking forward to that. And, you know, it's free right now. So I'd encourage all of our listeners to give it a free trial. So that pitch out the way, can you give us a little background on yourself and kind of how you came to find MBI?
Yeah, sure. Thank you so much for that generous introduction. You know, and for the record, I do enjoy your podcast. I watched a bunch of them, and yeah, you always seem to find pretty great guests, and I'm honored to be one of your guests. So yeah, in terms of my background, I am originally from Bangladesh. I was born and brought up in a small city named Bogura. I finished my high school in Bogura, and then I moved to Dhaka, which is the capital of Bangladesh. Dhaka is pretty much the center of the country. You know, it's almost 50% of Bangladesh's GDP happens in the capital, Dhaka. So everybody kind of moves eventually, more or less, to Dhaka. So I went to Dhaka when, for my college, and I majored in finance, at my college. And after graduation, I started working at a local firm covering Bangladeshi banks in the sell side. And I did that for almost 3.5 years. And then I moved to US to pursue my MBA at Cornell. So after graduating from Cornell, I joined at Madison Investments to work as a generalist in their US large cap equity team. And I pretty much had the opportunity to cover, all sorts of names from like Amazon, Boeing, United Healthcare, Intuitive Surgical, insurance brokers. It's pretty much all over the place. And I absolutely thoroughly enjoyed, that process of being a generalist and, having the opportunity to look into so many different industries and sectors. Unfortunately, since I'm not American, I need work authorization to be able to work in this beautiful country. And I don't want to get into the details of the immigration process, but I currently do not have work authorization. So I'm in the process of moving to Canada, hopefully in a couple of months. So when I had to leave my prior role, and unfortunately, I started writing pretty actively on Twitter, since this lockdown was started. And to my surprise, I was able to kind of build a following in a relatively short period of time. And as I was thinking about what to do, with my life going forward, when I moved to Canada, whether to look for a job once I moved there, or it occurred to me maybe I can just do something on my own. Maybe I can launch an independent research services, and basically that's how MBI Deep Dives was born. I know, like I said, I really enjoyed being a journalist, and I wanted to remain a generalist, and that's why MBI Deep Dives is basically will operate like a generalist. I was at Madison Investments, so I'll hopefully look into all sorts of names from all different industries and sectors, and publish one deep dive every month.
Well, look, I would just say I'm looking forward to the service, and I think some of the smartest investors out there. The first one that pops to mind is Scuttleblurb, David Kim, who was our third or fourth guest. I think they've run these subscription services very successfully, and one of the issues with these really good subscription services, and I would put Scuttleblurb in that category, is the value add is so far below what they charge. Like something he does. I don't read a lot of sell side research, but something that a Scuttleblurb piece or Jeremy Raper, who was another guest, who was our first guest on the podcast. Like when these guys publish a piece, I value it so much more highly than anything you get from sell side kind of for free because they bake in the commissions and stuff. But I totally could see like the report you did on Etsy is as good as any sell side initiation that they're going to do. Let's dive into a little bit. So you said you're going to be a generalist, and the first two reports, Uber and Etsy, those are tech growthy platform companies. You come out on two different pieces. Uber you were bearish on, Etsy you were bullish on, but the first two pieces are growth tech. What other stocks or industries are you kind of looking at for the near future for publishing?
Right. So when I think about my investing philosophy, I typically don't try to box myself as like value or growth investor. I typically, I see myself as just an investor. Mm-hmm. And in terms of what I'm going to cover, in MBI Deep Dives, I'll basically look at companies that I am primarily interested in as businesses. Like I that's my like starting point. I don't start from like looking at their multiples or valuation or, what exactly is going on in terms of pure numbers basis. I purely start from whether I'm curious about this business, whether I would like to know more about this business. Many times, market give you opportunity. Like if you do your work, even though let's say a particular name is trading at 10 times, 20 times, 50 times revenue multiple, sometimes these stocks do experience drawdowns, right? And Mr. Market can give you opportunity if you have done the work. If you just give up saying, oh, this stock is trading at 50 times, there's no really point in covering this particular name. Let's just move on to something that's trading at, 2 times, like 10 times, earnings multiples. I typically don't try to, look at it from that perspective. I am generally going to cover names that I am interested in. And frankly speaking, I will also take requests from many of my subscribers. So I am very fortunate to be able to build. I know it's only been like 2 months, not even 2 months, and there's a long way to go. But I was just looking at some of the people who subscribe to my services, and it's very humbling to look at the kind of quality of the subscribers. So obviously, there are a lot of subscribers who I deeply admire. And if they request me something, I may eventually cover those names. It may not happen instantly, it may not happen the next month or month after that, but it may happen in month 6 or month 8, right? So that's how I'm going to approach it, and I'm approaching it with a very open mind, not boxing myself with value or growth. Like just to give you context, my I guess largest position in my own personal portfolio is Berkshire Hathaway. I own companies like Dollar Tree or insurance brokers. So those are typically known as value stocks, right? So it's my own personal portfolio is a mishmash of value and growth names, and I imagine that over the long run, MBI Deep Dives will cover all sorts of names. But it is true, and it is possible that there might, it may be bent towards more to growth names, because it's the businesses that are growing super fast, growing pretty rapidly. Usually they turn out to be more interesting than the one that is just growing at 2-3% every year, right? So it is possible that I may lean towards more growthy names, but like I said, it doesn't mean that I will box myself out of the typically value names that you see in the market.
No, look, I think there's two things there that I just highlight. Like the growth names, I agree with you. I think a lot of the growth companies are a lot more interesting. And like one of the reasons I started this podcast is I would always research these growth names, and I'd have like good feelings to be like, oh, this thing, I think it's got a really bright future, but I'd look and say, oh, 5 times revenue, 50 times EBITDA. And I'd pass and I would be investing in these, 8 times earnings. And every time, I just be like, oh, I just think the 8 times earnings stock, it's got an okay outlook, but it probably deserves to trade over 12, 14. And, maybe it's just the environment we've been, but the past 5 years have taught us the 8 times earnings stock probably goes to 6 times earning. And then the 50 times EBITDA, 4 times revenue stock goes to 500 times EBITDA. So one of the reasons I started this podcast was, a lot of the investors have taught me so much and have really helped me. I know you're bearish Uber, but I think back to Mario Ciavelli on Uber or Elliot Turner on Dropbox. It's just been really fun to talk and kind of expand your mind. And I think that's going to be the great thing about the service, just researching things that are interesting. Let me ask one more thing. So every stock you mentioned, U.S. focus. I heard Berkshire, Etsy. There was another one you mentioned when we were Dollar Tree. All of them are U.S. focused. And when I look at that, that's great. I'm a mainly U.S. focused investor, but you're from Bangladesh, South Asia. There's much less coverage over there. I think it'd be tough to launch a research service entirely focused on Southeast Asian stocks. But why not go, kind of where less people are fishing and use some of your local area expertise and look more at Bangladesh or Southern Asian stocks?
Right. I frankly speaking, I'm approaching this MBI deep dives is more from what I'm curious about perspective and less about how I want to make more money. It's definitely possible that if you start fishing in kind of undiscovered areas of the world, Bangladesh would be probably one of them. It's possible you can probably make more money investing in those markets if you stick to it. Although that can be questionable in different circumstances, but markets in Bangladesh is obviously much more inefficient than markets here in the US. But like I said, just to go back to my previous point, at the same time, businesses are probably infinitely more interesting in the US than what you experience in those markets. Mm-hmm. So, I'm about to hit 30. I have plenty of time to look at all sorts of markets and companies. At my, when I'm 20, 30 years old, I want to spend more time understanding some of the, world's best companies. And I'm open to, there's nothing that will stop me from looking at or, even covering a Bangladeshi name in sometime in the far future. That is definitely, like I said, I honestly, as an individual investor, I really don't have to box myself to anything. But I do imagine that, it's probably 80 to 90% of even more of the names that I'm going to cover will be US focused, primarily because these are the businesses that primarily, deeply interest me as an investor. But I'm definitely not claiming that, these are the only possible opportunity sets that's out there. Markets like Bangladesh or India, they're obviously, I'm pretty sure there are great companies out there as well. And they can be interesting as well, and I'll hopefully eventually get to some of those names as well.
No, it's just I think 4 years ago, right now there are tons of banks that trade below tangible book value, right? Wells Fargo trades, I think, for 60% of tangible book value, but you can go find small community banks that trade for 70% of book value, and all of these guys have pretty clean balance sheets. They're reporting decent earnings and ROE, and 4 years ago, I feel like I would have been going crazy for these things. Oh my God, back up. But right now, maybe it's just me, maybe it's just a sign of the markets, but I increasingly find myself why am I going to look at those where if I get an Etsy right, it's a 10 bagger in 2 or 3 years, right? You get the Etsy right and it's 10 bag, or go look at a small Canadian company where I think a lot of the international smaller firms are just crazy underpriced, or there's some just wild pricings out there. So I'm kind of with you. I'm increasingly let's go look at really interesting tech growthy companies, or let's go look at really quirky, kind of smaller international companies. The place I'm increasingly avoiding is 4 years ago, where I would have spent most of my time trading below tangible book value, classic value investments.
Yeah, I mean, I recently commented to someone's tweet that, we will never out of opportunities. We'll never run out of opportunities. If we don't have enough, retirement money when they were, 70, 80 years old or 60 years old, it won't be because, we operated in a market where just there were not enough opportunities. There will always be opportunities in every possible market, in every geography, right? So I'm not in a hurry at all. Like, those banks, those international markets will stay there, and there will be opportunities all the time, even if it's like 5 or 10 years down the line. So I am taking it very, in a very slow manner. And that's why I just wanted to focus more on what I'm curious about, what I am interested in learning more. And, and it's possible, like I said in my website, that it's possible of the next 12 deep dives, I may be only bullish about maybe 2 or 3 names, right? So, and that's a real possibility. And, we can't really, I don't think you can pitch strong, stocks or very bullish ideas every month. It's just very difficult to do so. So I just, want to approach this. I will keep learning about different businesses, and within that process, I will stumble upon ideas where I would see opportunities. Fortunately, Etsy, I felt is one of the stocks, and yeah, I put my money where my mouth is.
No. Well, we'll talk Etsy in 1 second, but I will just say, that's one of the things I've liked most about something like Scuttleblurb, where it is a research service. It is not a stock pitch service, right? Like he gives you an overview, and sometimes you can kind of feel he's bullish or bearish on something, but he's just there to give you an overview. And I'm not paying for stock ideas per se. I'm paying to increase my knowledge. And I see a lot of that in MBI as well. Obviously you said you bought Etsy, but what it is, it's a deep dive into Etsy. It's a deep dive into Etsy or Uber and some of the fundamentals behind them. It's not necessarily a pitch, and I quite enjoy that.
Yeah, I guess one slight difference from, let's say, Scuttleblurp's approach to mine would be, I think I'm more explicit in terms of my bullish or bearish tones. Yeah. I just wanted to make clear to my readers where I stand, so that they understand my possible biases or some blind spots when I was looking at the name. I felt that would be easier for the reader to guess where I am coming from, and that's why I'm just much more willing to to explicitly state whether I'm bullish or bearish. But what Scuttleblurb does, and he does it so brilliantly. He definitely explains in much more detail about the businesses, which I guess most professional investors, at least, are much more interested in. If you are running a fund, you're probably not really looking for stock pitches from every random person in the internet, right? You are much more interested in understanding businesses and then taking a call yourself whether you would like to take a position.
All right, last one, and then we'll turn to Etsy. You said you take requests. One of the stocks that has obsessed me the most over the past month, and for actually the past 3 to 4 years, IAC's obsessed me the most the past 3 or 4 years. And over the last month, something just clicked for me with Angie's List, and I've gotten extremely bullish on Angie's List. I don't know if you've looked at that or not, but if you haven't, I'm putting in a request for some Angie's List coverage at some point in the future.
Yeah, sure. As a matter of fact, I actually own ISC, so I do have exposure to whatever happens with Angie going forward. But admittedly, I haven't spent as much time on Angie as I have, let's say, on Etsy or Uber. So yeah, it's definitely a name that I have my own interest to dig deep into sometime in future. Maybe sometimes within next 3 to 6 months, I'll probably do a deep dive on Angie's List. Yeah.
One of the things that worries me the most about IAC is every smart growth investor I talk to over the past 3 years, I would say, is generally pretty bullish on IAC. And this time last year, IAC traded below the value of its matched Angie's List stock. And yep. I was kind of having trouble because I was every single person I talked to is bullish on IAC. You had to change the trades for a discount. What's going on? And now IAC spun off Match, and it's Angie is about 50% of the value there. And still, every person I talk to is pretty bullish IAC, to be honest with you, some more than others. And I just worry, it feels like the ultimate growth or value investor, hedge fund hotel. But, I love the assets in there. But anyway, this podcast is not about IAC as much as I want it to be. This podcast is about Etsy. Most people listening to podcasts are probably somewhat familiar with Etsy, though I still think there are some misperceptions about it. So why don't you just give us a quick overview of what Etsy is and kind of what attracts you to the company?
Right. So Etsy is a two-sided online marketplace connecting millions of buyers and sellers, selling handmade, vintage, which is like more than 20 years old, and craft supplies. So it's a niche within the broader e-commerce market. So they don't sell every possible thing that's available in the retail market. So they typically sell only the vintage, craft, and handmade items. And like I said, it's a two-sided marketplace. So Etsy is the owner of the marketplace. They don't have the first party that you have, first party business that let's say Amazon has. So it's just connecting the buyers and sellers, and being a facilitator in the as a middleman. So they are typically more US focused. I think only 36% of their gross merchandise sales is international as of 2019. They identify six countries as their kind of core geographies, namely US, UK, Canada, Australia, France, Germany. But if you are in New Zealand or Finland or Austria, you can definitely go to Etsy and start selling, or you can go to Etsy and buy something or order something from a seller based in, let's say, Ohio in the United States, right? So you can do that, but they identify those six markets as kind of their core geographies. And and then in terms of their gross merchandise sales, it's last year it was almost 5 billion, I think, because of COVID-19, and we are kind of all forced to buy everything online. So it's probably going to reach somewhere around 8.5 billion. So almost more than 70% growth year over year in 2020 compared to in 2019.
So and I know Amazon launched a competitor, which we'll talk about in a little bit, but just for I looked at this company a few years ago, and much to my detriment passed on them. But one of the things that stuck with me, I'm not a big shopper, but if I'm going online, let's start from the buyer's perspective. If I'm a buyer, personally, I would just go to Amazon, get free 2-day shipping, and have whatever I'm getting delivered straight to me. Why am I going to Etsy over Amazon or eBay or Walmart.com?
Yeah, I mean, so it's just a kind of customers or kind of buyers that are somewhat different from let's say a typical buyers like you at Amazon. Like I'm probably more like yourself. I also typically end up going to Amazon or some other like eBay even. But Etsy's customers are somewhat different. First of all, like if you're interested in handmade items or craft or vintage items, those three words are associated with Etsy much more than it is associated with, let's say, Amazon or eBay. Like if you're buying jeans, like you are not going to go to Etsy. It's only if you're like something quirky, something more uncommon, something unique, you're looking for something handmade. The first name that really comes to your mind, is Etsy. Now, it may sound controversial to people. I actually don't think they are really a competitor of Amazon or eBay or even IG shopping, because to be a competitor for Amazon or IG shopping or eBay to be competitor of Etsy, they first have to grab the mind share of the buyers. Like when I'm thinking about craft items, supplies, or vintage, or handmade items, they have to kind of make me remind that Amazon is also a possible option, or IG shopping is a possible option. If you go to IG shopping and search something that is also available at Etsy, you would see there are all sorts of names that are not like handmade or that are branded items, right? So it's if you there are a lot of customers who care about small independent businesses, right? Care about much more about supporting them, and if you are one of them, and if you're looking for something, like I said, quirky, you would end up in Etsy rather than in Amazon and eBay.
So just two things there. I just want IG shopping. You dropped that a couple times. Instagram shopping, right?
Right.
Okay, perfect. And then the other thing, you mentioned handmade a couple times, and one of the cool things about Etsy, I think, and again, I'm not a big shopper, you can correct me if I'm wrong, but is you can actually I go shopping and I get a painting to put up there because everybody's looking at my podcast and seeing a barren wall behind me. I get a painting and I can actually communicate with the seller and say, hey, this painting, can you put Andrew and Alicia in the middle of it or something, and get it customized that way, which is something that Etsy allows for that I don't really think you can do within Amazon or an eBay or something. Can you correct me if I'm wrong, or am I right there?
You are absolutely right. I mean, if Amazon starts allowing that, and those sellers would go crazy because the volume at Amazon is substantially higher than the volume, a third-party seller experiences at Etsy. I mean, I want to make one thing clear, that the end markets of the broader retail, which is the end market here, is just insanely large market, right? It doesn't have to be either or. It's not really either Amazon or Etsy or eBay or Etsy or IG shopping versus Etsy, right? All of these companies can be successful. Obviously, some more so than the others, but they all can coexist. It's just we're talking about trillions of dollars of markets here, right? And if you think about it, so last year, based on 2019 numbers, I was estimating that Amazon, Etsy, is basically 1.5% of Amazon's GMS, right? And 5% of eBay's GMS, right?
And GMS, gross market sales, that's the entire kind of market volume. Amazon does 100 billion in sales a year or something on the Amazon website.
Gross merchandise sales.
Yeah.
And Amazon does actually something like 260, 270 billion.
Yeah, I was just pulling it.
Right. And eBay does 90 billion. And again, these are kind of dated numbers, based on 2019 numbers. Obviously, all those numbers have increased a lot, during this pandemic, and Etsy was 5 billion last year. So yeah. It's peanuts to someone like Amazon or even eBay. And I don't think they're really, Amazon or eBay is going to stop and say, you know what, eBay is doing really well. Let's focus on the handmade market because that's where they're really doing well. Even Facebook or IG shopping, you have to understand, when Mark Zuckerberg is looking at this opportunity, this e-commerce opportunity, he's not interested in $20-30 billion markets. He's much more interested in $1 trillion market because the company he runs is $700-800 billion market cap. So adding a $20 billion marketplace, or being successful in a $20-30 billion marketplace doesn't really move needle at all for either Zuckerberg or Bezos. So they are competing at the at the most broad definition of e-commerce retail, and Etsy is going to continue to focus in a very niche segment of that. And I talk about even in 10 years, even if Etsy continues to grow at a pretty rapid pace, it's probably going to be 25 to 30 billion dollar GMS in 2030. And by the time Amazon will have $1 trillion of GMS, so it will, right now it's 1.5% of their GMS. 10 years from now, it will probably be 2.5% of their GMS. It's still going to be peanuts to them. And Amazon is not going to, stop and focus on handmade items at the expense of their core marketplace.
Yeah, I want to come back to the competitor argument because I do think it's an interesting point, and I agree with a lot of what you said, but I disagree with some of it. But just to focus on the size, one of the things that struck me in preparing for this is I was reading a transcript with the CEO, and he said, look, even after all this growth, we're going to do $2 billion in home sales goods this year, and home goods is by far our largest category. And he was like, look, if you look at $2 billion in the grand scheme of all the home goods that get sold, I think it's as you said, it's 1% of the entire market. It's absolutely nothing. It's very difficult for Amazon. Is just, hey, you want to get you want to get a counter, we're going to ship 500 of them to you. But if you want something custom, there's not really a place for Amazon to do that. And Etsy allows for a lot of, as you said, a lot of talking between the buyer and seller and customization that Amazon's platform just isn't set up for that. The other moat they said, and I'd love to hear what you say about what you think about this, and I think this will come into competition as well, is when you're looking on Etsy, because there's so much customization, search is incredibly difficult. And they talk about how their technology for search, like Google's not going to be, it's almost like the Google, right? Where it can handle all these tail risk searches. Amazon's not set up for that. So can you just dive into how search and customization actually increases their moat there?
Yeah, I mean, it's definitely not as easy just, typing a product on the search bar. There's a bit of a learning curve, even from the buyer's perspective, to really know what exactly they're looking for, right? So it takes time, and like I said, there's a bit of a learning curve associated from the buyer's perspective. And Etsy has been trying really hard to really improve the search experience of the buyer. Like it may sound pretty easy fix, but they actually started, kind of sorting the product based on like, free shipping and all that, which sounds pretty obvious that they should have probably done like years ago, but it's actually a pretty recent addition, right? The fact that, they were still doing so well, even without this kind of obvious fixes, right? If people obviously want to probably, buy from sellers who offer free shipping services and all that. But it's been added like, probably a year ago. So they have been working on how to like improve the search experience, and also, and I mentioned in my piece, they used to focus more on like bottom of the funnel marketing. Like, if you search like vintage scarf on Google, right? And and you probably will come across Etsy's marketplace, and you will go to Etsy and buy, let's say, a vintage scarf from Etsy. But you may not realize that all the other possible products that you could also buy from Etsy. And Etsy did not really invest in those sort of marketing messages before. Right now they're trying to like put their money into work in terms of creating a more broader message and kind of educating the customers, the buyers, that there are a lot more things than just vintage scarf, or like our small quirky items that you can buy from Etsy. Your opportunity, like in your product set or categories, are much broader than that. And I think because of the COVID, that education has kind of exponentially accelerated compared to what they experienced, like last 2-3 years ago.
So let's stay on that, because there are actually three bear cases I want to talk on, and this gets to the first one, which kind of will bleed into the second one. But I think one of the bear cases is, look, if you're a customer and you go out to, like, Etsy trades at 10 times sales, so a piece of the bear case is obviously just valuation, right? But I do think a large piece of it is 10 times sales for a platform. That actually might make sense. But they say Etsy, yes, it's a platform, but it's not a platform like Amazon or something where there's a lot of repeat usage, right? Like for Amazon, if I go on there, I might get Subscribe and Save to have protein powder and bottled water shipped to me or something, right? Like it drives a lot of habitual repeat usage. Whereas for Etsy, and I'm not a shopper, so maybe there are some people who go and buy vintage scarves once per month or something. But if I look up vintage scarf and I find Etsy and I go buy something, like that's a one-time purchase. And the next time I want something, like their customer acquisition cost doesn't result in that high of a customer lifetime value, because they don't get those habitual user purchases, I think would be one piece of the bear case. So am I right or wrong there? And could you kind of address that?
Yeah, I mean, there's certainly an element of truth in your concerns. So only 5% or 5.5% of their total active buyers are actually habitual buyers, who they define and who are basically defined as buyers who bought from Etsy more than 6 times in a year, or spent like more than, I think, $200 per year. And they are like only 5.5% of the total active buyer base. So they are definitely a small minority, and many people, like 50% of the buyers are basically one-time buyers, as you mentioned. So there's definitely element of that for sure. And like I said, we're not looking at a $500 billion market, right? We need to acknowledge the extent of the debate. If it's a debate there's a huge difference between the debate between, let's say, whether it's a $100 billion, $150 billion market, and we talk about like this 50%, right? And there's another debate whether it's a $100 billion market and $500 billion market, right? I disagree if someone says it's a $500 billion market. I don't think it is, right? but I'm willing to say it's actually probably closer to $150 billion market than $100 billion market, right? And because we're talking about such big numbers, I think those nuances can get lost. That you may not need a lot of habitual buyers for Etsy to be able to continue to outperform or continue to continue to be able to generate compelling returns. And I think overall the biggest competitor for Etsy is not really even today is not Amazon or eBay or IG shopping. It's actually the physical stores. So 45% of the buyers who buy people who buy craft items or handmade or vintage items, 45% of them go to Etsy, and 30% of them go to actual physical stores or craft fairs, right? And 15% of them go to the sellers' personal websites. It's a Shopify sellers, right? And 11% go to Amazon, eBay, and all other marketplaces. So at the end of the day, Etsy's primary competition is not really Amazon, it's eBay or some other marketplaces. It's actually the physical stores, and I think I have high confidence that if the competition is against those physical stores or craft fairs, Etsy is going to win that competition.
Yeah, no, look, I think going back, I mentioned Angie's List. And, for Angie's List, they're trying to connect a person with a plumber or an electrician. And historically, that's been done by word of mouth referrals, right? Like I would ask you, hey, who's a good plumber? You would tell me and I call them up. And what Angie's List argues is, hey, this is moving online, right? Like people want to go and basically see, hey, here's a plumber who's got 20 good reviews. Here's a time you can book them. Done. And I think it's the same for Etsy, right? Like the one thing that the internet has taught us time and time again is convenience and speed wins out. And like for Etsy, I agree with you, though, there is something to, there's a treasure hunt feel to going to a craft store and kind of searching that Etsy's trying to recreate a treasure-like feel on the site, but there's something to being in person and kind of sifting through the goods. But let's talk.
It's not going to be, physical stores will continue to play a very strong role for a long period of time. It doesn't have to be 80-20. It can be like, even if it becomes like 60-40, that there's still a lot of room left for marketplace like Etsy to continue to grow.
And you discussed TAM, but there's also probably enlarging TAM, right? Like for a craft store, like people actually have to drive 30 minutes and go do that search, and it takes a pretty long time. Whereas if you've just got it online, like that should just enlarge the TAM because it's easier to search, hop on. You can make that custom request a lot easier and a lot quicker. So I think that,
and just to kind of touch on I guess the TAM aspect. Like if you're really interested in vintage items or craft items or handmade items, Etsy allows you to look at handmade or these vintage items from all over the world, right?
Mm-hmm.
It's not just there's a global appeal, and that's why I feel like Etsy is a much stronger platform or marketplace business than Angie's is, because they enjoy not hyper local but more cross border network effects. Like if Etsy wants to go to if Etsy wants to go big on Austria, for example, they really don't have to make sure that there are a million of there are like thousands of Austrian sellers on the platform. They can just focus on the consumers, on the buyers. They can just spend their marketing dollars on that, and they can just order things from neighboring European countries or from America or from some other different parts of the world. So there's a global appeal of these handmade items, which makes it much easier for Etsy to scale a lot faster, right? And at the same time, unlike Uber, their suppliers are differentiated. Like since these are not commoditized products, every seller is basically putting their own thoughts, ideas, culture, and philosophy into making those products and items. The suppliers base is extremely differentiated in nature. Like if tomorrow 10 million suppliers go to Etsy platform and start selling their products, that will significantly improve the experience of the active buyers on the platform at Etsy. We cannot say the same thing for a platform like or marketplace like Uber, right? So if you like significantly increase drivers base in a particular geography, if you increase drivers in New York City by like 1 million, drivers on Uber platform, the benefits to the riders, yeah, it's definitely, there are some benefits, but there's also an asymptote that can be reached at some point, and there may not be and the marginal benefit may decrease pretty fast after a certain point.
Well, number one, how dare you besmirch Angie's List? That's number one. No, I hear what you're saying, but let me flip it around a different way, right? Like, so Uber and Angie's List, what we're talking about is a hyper-localized network, right? And Etsy, what we're talking about is...
And just to be clear, Andrew, there's definitely a value to that. I'm just comparing these two different businesses, and I'm arguing that one business is better or superior than the other, but doesn't mean that, these marketplaces like Angie's List or Uber are worthless, or, they don't have any value. They obviously have any value, but it's just, much more difficult to scale and probably inferior in terms of business, as a marketplace compared to, let's say, Etsy.
So I hear you, though. I think there is a counter to that, which is like Etsy, right? Because it's the suppliers, because the suppliers are global, right? Like they do have an incentive where, hey, if I'm doing a lot with handmade scarves or something, right? I can opt out and I can go and create my own handmade, like the Shopify thing, right? Yep. Whereas for something like particularly Uber, though, at some point I believe Angie's List suppliers will run into this problem. Like if I'm a car driver, even if I'm the best car driver in the city, if I pop off of Uber, boom, my business is done, right? Yep. So for Etsy, I do think there are alternatives, particularly for the best people. Whereas for Uber, there's just absolutely no alternative for the suppliers because of that hyper localized network. So I don't necessarily disagree with you. I mean, I think Etsy.
No, that point is actually, I accept your point, and I absolutely agree. There are pros and cons to, both business models and both marketplaces. You're absolutely right. There is a risk that if you are really a fan of a particular, seller on Etsy and you fall in love with the products that person makes, there's a huge possibility that you would rather, and the seller might actually, ask you to go to his or her personal website and buy it directly from their website, so that he or she can bypass the take rates or the, transaction charges that Etsy charges on the seller, right? That is a possibility, and it is one of the risks that I do think Etsy might face because of this conversations between buyers and sellers and the customized nature of the platform. It is definitely a part of the one of the risks that you have to consider. I take your point. I accept your point.
Yeah. No, and look, I think Etsy is a great business with a lot of scale. I just it is one of those things, like a hyper localized market. It obviously doesn't get as much scale, and it makes it much more difficult for one of them to move into Australia. At the same time, if you dominate hyper-localized markets, like for someone to come in and beat you, like if I'm going to go in and beat Uber, I can't just beat them in America. I have to go beat them in New York City. Then I have to go beat them in Dallas. Then I have to go. So it is an interesting version. And then, actually, speaking of that, that kind of brings us to the third. Oh, no. Actually, we're not even on competition. Let's talk about the second bear point, which going back to the customer lifetime. The second thing is, look, this is expensive in its own right? This is 10 times revenue, which 10 times revenue is the new 10 times EBITDA, right? It's a marketplace. Everybody wants to buy marketplace for 10 times revenue. But I think a second piece of the bear point would be, it's not just that it's 10 times revenue. Revenue has been hyper-inflated by COVID, right? Like Etsy, of all the online suppliers, Etsy may have been the one that benefited the most in terms of growth from COVID. And I think what a lot of bears are saying is, that they're probably going to see a sustained boost over time. Some people are in it, but it's not going to be this big, right? Like in this year, they're going to sell $1 billion in masks alone, and fingers crossed in two years, that $1 billion mask, the revenue will basically round down to zero, right? And that's a lot of revenue loss for Etsy. So a lot of this home decor that people are buying right now, yes, it'll grow, but it's probably at a peak right now, and they're going to lose a lot of that once COVID kind of blows out. So how would you talk to a bear who's saying, it's not just expensive, it's expensive on inflated numbers?
Right. I just want to touch more on the valuation space, and I just want to
Please.
probably talk more about like how I think about valuation. So, I often joke with my friends that valuation is just like religion and politics. Everyone has an opinion, right? And it sounds very interesting to have a conversation around those three topics, like valuation, religion, and politics. But 9 out of 10 times, people really don't change their opinions, and it oftentimes become not a good faith discussion, right? So people who talk about like 10 times revenue is expensive, and I often see this quote flying around Twitter. Scott McNealy quote, who is the CEO of Sun Microsystem, and he talked about 10 times revenue. What were you thinking? Why would you be 10 times revenue?
Hate that quote. Hate it. Absolutely hate it.
I'll be honest. The first time I read it, I found it very compelling, and it almost made sense to me, right? And then I kind of taught myself that actually it doesn't make any sense at all, right? So yeah, I mean, I see like two groups of people when it comes to valuation. Like one are like just hyper focused on valuation all the time, and I would like to almost ask them like, if okay, fine, 10 times is expensive. Like I don't know how you came up with that. Like there's we can't really look at a multiple and just say it's expensive or cheap, right? If it's okay, if it's 10 times, if 10 times revenue is expensive, like what would you consider as cheap? Is it 8 times, 5 times? And if it's let's say it's 5 times, right? Why do you think Mr. Market is not a charity, right? The market is not a charity. Like you can't expect to have businesses like quality businesses to trade at a dirt cheap level, right? It will be uncomfortable for sure. And I do think if I were looking at Etsy at time, it would obviously be more uncomfortable to buy at let's say 150 than I bought it at 110, right? And those are the things that investors today have to wrestle with every day, whether this is the right valuation, because valuations do matter, right? And there's this other group of people who thinks it doesn't matter what you pay at all, right? They can just look at a drawing on a page and put $20 billion market cap on a company, right? So I obviously, I think I would deeply disagree with both those people. I do think valuations matter. What you pay obviously matters, but you can't just look at a multiple and directly conclude whether it's expensive or cheap. There's no such magic formula, right? So you have to kind of do the work and come up with a conclusion. So basically, the way I look at my valuation is I probably have two-step process. One is it's what I call like belief and think process. So first step is, what do I have to believe to what do I have to believe to make a decent IRR on this investment, right? And the second step is, do I think those assumptions that I had to believe to make that decent IRR are reasonable, right? I don't believe I have some special insight, in terms of where Etsy will be 5 years, 10 years down the line. I can't possibly forecast those numbers with any more accuracy than you would, right? So to me, my first starting point is, what do I have to believe in? Like what sort of numbers Etsy has to put up to be able to generate a decent IRR. And the second step is, and I eyeball those assumptions and then take a call whether these assumptions sound credible or reasonable. And my answer was obviously that I do think these assumptions are reasonable. To kind of touch on your point about the mask and like $1 billion of so far I think till Q2 they sold like $346 million of mask. Yeah, it may reach $1 billion. Let's just say it's $1 billion of mask sales in 2020. That's GMS, that's not revenue, right? So revenue is basically 16% of that. So it's a $160 million of revenue on that number. It's also true, non-mask sales grew 93%, right? So it's not just the mask, as you said, the home furnishing items and all that. It's not easy, I think it's fair to agree that it's not easy to forecast what numbers will be in 2021 or 2022 even, right? But if I look at it, like since more and more people are now aware of the marketplace and they have kind of explored what all the possible items they could buy from this marketplace, and I think the CEO mentioned how bread making products of all things became widely popular. Obviously, bread making products were probably not going to be sold as as well as they did in this year, but it will be something else. You know, you and I cannot sit here and predict those numbers. And I can tell you, even Etsy management doesn't know, right? So and that's the beauty of the model, right? The third-party sellers, it is their job, it is their responsibility to figure out what exactly is going to work in 2021 or 2022, right? And they will come up with these products, and that is the bet, you know, and that's the power and the beauty of the marketplace. And I think that's why it's continuing to going to work. Whether it's going to be 15%, 10%, it honestly speaking, for long-term shareholders, I don't really sleep over it. Like, you know, maybe Etsy will have 20% drawdown in next year. That's totally fine, as long as the, you know, marketplace remains in a decent shape, and management continues to execute. I don't see why you know, a certain slowdown in growth in a particular year would cause me to lose sleep.
No, look, that was so well said. I'm actually envious because I was ready to make the same point. The beauty of a marketplace is you don't know what the next big thing is going to be, but people are going to transact it over your marketplace, and you're going to take a tax. You know, as you said, in May, nobody thought it was going to be bread baking. You know, I think of something like the Apple App Store. Like,
yeah.
Among Us is the hottest game out there right now, and it was released 2 years ago, and no one played it. No one knew it was going to be the big thing, but the great thing about the Apple App Store is they're taking a cut of every sale on that game. So it's the beauty of a marketplace. Let's just, I'm cognizant of time here, but let's quickly touch on competitors. You know, I think when I say, hey, it's an online retail marketplace, right? And when you hear that, your first thought is Amazon is going to destroy them. And I believe Amazon actually tried to move into this space a couple of years ago. So why don't you just touch briefly on the Amazon risk and how their foray into custom homemade goods went?
Yeah. You know, sometimes it's very helpful to kind of look back and see what happened. Like, you know, even today, people still talk about Amazon and eBay or even Facebook as potential competitor for Etsy. But this game has already been played, you know, in last 5 years. So Etsy, you know, came to IPO in 2015, and 6 months later, Amazon Handmade was launched, right? Yep. So it's been 5 years, and when they launched it, Etsy was cut in half within 3 months, right? And from the lows of 2016, it's actually 20 bagger, right? So this game has already been played, and I think to me, the verdict is clear. You know, Etsy has been a winner in that particular segment, and like I said, you know, Amazon, you know, probably shouldn't care about the success of such a niche when they have opportunity to go after, you know, trillions of dollars of, you know, market, right? So it's just the size of the market that, you know, marketplaces like Amazon or Facebook or even eBay, you know, operates is just very different in terms of scale compared to Etsy. And you know, I don't see why the next 5 years will be any different from the last 5 years, right? Amazon couldn't compete with Etsy. Etsy's marketplace basically grew almost four times in last, you know, 6-7 years, when Amazon was obviously, you know, raging through all the, you know, retail marketplaces. So I don't see in the next 5 years or 10 years is going to be any different. So that's why I know I'm very comfortable with the path going forward.
The one thing I would push back on you is I agree. I think the game's already been played, right? Like Amazon launched Handmade and failed, but I think the moat has been not completely settled, but largely settled at this point. The one place I push back on, hey, this is too small for Amazon to worry about. Like, I don't think that's true, because if you're a marketplace, like if Amazon could eat this, Etsy's $17 billion of value. Amazon would not have to, if Amazon could invest it, if they could invest $2 billion to kind of take down Etsy and add 15 billion, like maybe Amazon as a whole doesn't care, but I can guarantee you there's a product manager or something who cares over there, right? So yeah. I don't think there's anything too small. Like Google, if you look at the grand scheme of Google, the Expedia type OTA travel was pretty small compared to Google, but Google obviously wanted to eat that because they're a platform and they could profitably extend for very little investment instead. I think the issue is, can you do it, and can you do it? And the answer is no. Like Etsy has a marketplace, they have that flywheel already spinning, and to kind of extract all the buyers and all the sellers, it's a chicken or the egg problem that can't be solved. The one competitor, and we mentioned this earlier, that I think is interesting is Instagram. You know, when I think about Instagram, I see a lot of things like they've got a huge user base. It's a very visual product. I could see a lot of ways that could be an Etsy competitor at some point. Can you just talk briefly on Instagram as a competitive threat?
Right. I mean, we don't know much about exactly how Instagram shopping is going to, going to operate. It's just a very recent launch. But I think I kind of also touched upon this, in one of my answers earlier. I think it's likely to be similar to what happened with Amazon Handmade. Uh, like I said, in the search experience is very difficult. If you're looking for a handmade or vintage item, and if you're looking for that on an IG shopping or Facebook Marketplace, it's not going to be an easy experience for you.
Yeah.
Even at Etsy, it's not an easy experience, right? You still have to kind of look for it. You still kind of have to know what you're looking for. When the whole marketplace itself is just primarily designed for these handmade or vintage items. So for Facebook or IG shopping to kind of focus on that when they're also targeting this broad e-commerce retail space, right? It's going to be even more difficult and even more cumbersome for the customers to really to have a decent and facile experience when they shop around IG shopping. Again, it's still early days. It'll be interesting to see what happens. It is possible that they may come up with something entirely different. Maybe IG shopping can come up with IG handmade or something like that, and it would be interesting to see whether they are any better than Amazon Handmade was. So yeah, I mean, as an investor, as investors in the stock market, we have to be on our toes and kind of follow what happens in a different competitive environment, different market environment. But so far, what I've seen in the last 5 years and studying this company, over a few months, I think I'm comfortable in saying that Etsy is likely to remain the leader of this marketplace by a significant margin.
Yeah, you mentioned Etsy selling off by 50% when Amazon launched Amazon Handmade, and that reminded me of 2 or 3 years ago when Facebook launched Facebook Dating and Match's shares sold off by 40%. And I remember, a lot of people were saying, just no chance. And personally, I would just love it if Instagram launched Instagram Handmade or Instagram Local or something, and Etsy stock sold off 40% because it's one of the things I look for now. If a big company says they're going to try to attack something with a flywheel, you want to be wary, but in general, the market sells off hard, and it's very difficult to attack one of these flywheels or one of these platforms. Anything Etsy that we haven't covered that you think we should be talking about or anything?
I think, I also wanted to focus on the role the new management played. Josh Silverman, he became CEO in mid 2017. And the stock was actually, wasn't really doing great, and not just, for Amazon or things like that. They also were not executing well. Their GMS growth was kind of, mid to low teens, right? And when Josh became CEO, actually market wasn't very positive. The stock went down by 14% on the day he was announced as CEO. But yeah, what it did over the last 3 years is just it's just great to watch. Every quarter, I think almost every quarter, the GMS has been either high teens or almost 20% actually, almost every quarter. Even before the pandemic, it's during the pandemic, it's 120%, 130%, something like that. But even before that, it's been consistently 20% GMS growth and on every quarter. So I just want to highlight, execution matters a lot in any business, no matter how great business you have, how great marketplace you have, and you still need someone to execute well, continuously for a long period of time. And I think Josh has been an instrumental, figure to be able to do that over the last 3 years, and the stock has been a 10-bagger since he became the CEO. So he obviously did a great job.
Yeah, and prepping for this podcast, I was reading some transcripts, and he was pulling out Maslow's hierarchy of needs right off the top of his head in response to some questions. So I was like, oh, this is a CEO who's pretty well read and pretty prepared, and I agree he's done a great job here. Yeah. All right, well, hey, Abdullah, this has been fantastic. I'll be sure to link to MBI deep dives in the show notes and everything. I've really enjoyed Uber and Etsy. I really enjoyed this conversation. You know, I feel like your discussion of the platform, you should just highlight that. That should be one of your highlights and pitches for deep dive and stuff, because I thought that was fantastic. But look, this was great. We'll have to have you on in a couple months when MBI Deep Dives is kind of up and rolling and fully operational, and you publish a really interesting new piece. But really appreciate you coming on, and we'll chat soon.
Yeah, I look forward to further invitation, and I really, really thank you for inviting me. I really enjoyed this discussion. Thank
Perfect.
you.
Thanks again, man.